I'm Scott Tibbles with the Investing News Network. I'm here today at the Vancouver Resource Investment Conference, and joining me now is Brian Leni of Junior Stock Review. Thanks for joining me, Brian.
Thank you for having me.
So, first off, looking back on 2018, it was not a great year for base metals. Can you just run me through your thoughts on why?
It was definitely not a good year for base metals. I think interest rates and, of course, the U.S.-China trade war had a major impact on the base metals in particular. And we're definitely looking to 2019 to make that a little bit better.
Okay, and so now that we're a little bit into 2019, what are some early signs for how the year's going to track?
I'm not really sure, but I think leading up to the March interest rate decision and some of the things going on in the States are things we definitely have to watch. And I'm encouraged, especially from a precious metals point of view, that it could be a good year. The base metals, I think that we'll need to see a resolution between the U.S. and China before that market can get rid of the uncertainty, but I'm positively optimistic. So.
Okay, and so speaking of base metals, you're here this week to talk about nickel. Can you just tell me a little bit about what you will be talking about today?
Sure. So there's a few overlying points that I'm going to be covering. Nickel is driven by stainless steel. If you're bullish on nickel, you're bullish on stainless steel. So that's one of the factors I'll be covering. And then, of course, I'll touch on the U.S.-China trade war. And then probably the biggest overlying impact to the nickel market is the Chinese announcement of an HPAL plant in Indonesia and why this is affecting the nickel market and what the implications will be if they're successful. So.
Okay, and so you've mentioned stainless steel, which obviously is where most of the demand for nickel comes from. But just watching what companies are saying, it seems like the narrative is driven by electric vehicles. Can you just run me through why everybody's so focused on that?
Sure. So personally, I still look to stainless steel for my outlook on nickel. But EVs is sort of an icing on the cake, in my opinion. But the reason why people use it in the narrative is because of how disruptive it could possibly be. And just to put it in perspective, Glencore last year came out with an estimate based on a 30% adoption rate of EVs in our lives. So as far as how this impacts nickel, this is around 1.1 million tons of demand. And the fact is it's a 2 million ton market. So you're looking at roughly 55% of extra demand over the course of the next 10 years. This will have an impact if it comes to fruition. So time will tell, but you kind of wonder where's the supply going to come from.
Okay, could electric vehicle demand ever overtake stainless steel, or is it always going to be stainless steel?
It's tough to say. I would say probably maybe not in our lifetimes. But like I said, stainless steel represents around 1.5 million tons of demand. Yeah. Considering a 30% adoption rate is around 1.1 million tons, I would say for sure. Okay. But it's a little bit further in the future before that happens.
Long term.
Long term, yeah.
Okay. And so staying with electric vehicles, when it comes to realizing that demand and how it pushes the nickel price, what would an investor be looking at that would make them bullish on nickel? Should they be looking at car maker data, what the miners are saying, stockpiles, legislation, or even battery technology?
So I think it's threefold. Like I said, you start with stainless steel and how you feel stainless steel is going to be in the future. Second, and I think probably the biggest point that I was nervous about was global inventories. If you rewind back to 2016, when I first started kind of looking at the market, it was the inventory levels were almost 500,000 tons. And I really thought to myself, oh, this is a big hurdle that it's going to have to be overcome for us to get into a bull market. Yeah. And, lo and behold, 2018 was an amazing year for drawdown on LME supplies. And this drawdown was by that Class 1 nickel market. It was consumed by stainless steel. And these are great signs moving forward. So I think continued drawdowns on nickel inventory and considering that our supply numbers are dwindling, these are great signs and stuff that we need to watch moving forward.
Fantastic. And so just wrapping up, so obviously there's a lot of companies here. Do you think that you could just give me your top stock picks for 2019?
Sure. So from a nickel perspective, I like FPX nickel. Yep. I'm an investor and I have been for a while, and it all centers around Martin Turenne, the CEO. Next to that, outside of nickel, I like Adventus Zinc. I think they're, again, great management, and they've got a great deposit and some exploration upside. So yeah, those are two that I like.
Fantastic. Well, we will wrap it up there. Again, my name's Scott Tibbles with the Investing News Network, and joining me just now has been Brian Leni. Thank you for joining me.
Thank you for having me.